Happy Sunday, friends. It's Brandon here with your Orange County Housing Market Report for the week ending April 12th. And this week we had more inventory come on the market. It's exactly what I was expecting about this time of year. We always have more homes come on after Easter, after spring break. Everyone's kind of gearing up for the school to end. They want to get their homes on the market now for either moving this summer, relocating. And we see inventory statistically go up every single year about now all the way until around August, September. As far as homes going under contract, we had fewer go under contract and fewer go pending this week. So demand was down just a hair. And maybe that's because spring break for a lot of folks were still going on this week. We'll see how it goes next week. Right now, the coming soon listings for next week look a little lower than they were last week. So we'll see maybe a drop in inventory. Again, we probably recaptured a little bit that didn't list during Easter and they relisted this coming week. So maybe next week we're going to see a little bit of a dip, but throughout now until August, you're going to see more and more inventory, which is great for buyers. That's what they're looking for, and they haven't had it lately. We just don't have the inventory. There's a lot of people still looking for that perfect property, and they're going to be excited that it should start coming on between now and August before it starts to kind of decline seasonally after that. As far as economic news next week, we have PPI on Tuesday. We have unemployment claims on Thursday, and then we have Fed speakers all throughout the week. I don't think that much is going to go on this week to affect rates economically. It's going to be all about the war. So we had a ceasefire on Friday, and it sounds like that's not going to happen, or it kind of is retracing a little bit. So I would expect if this ceasefire is off the table, oil is going to go back up, and that's going to raise interest rates probably a little bit on Monday. So we'll see how both futures open up tonight, and then tomorrow the stock market probably going to be a little bit down. And how does that relate to housing? It's really all about the 10-year and interest rates. And so right now I think we are at 6.3, 6.4, which is still better than we were last year, which is great. And that's why we have the demand that we have. But once this war is done, you're going to see them go down. And if it's any indication of what we saw in January or February this year, the market's going to continue to be hot. We'll just have more inventory, which will soak up some of that crazy bidding wars. So that's where we're at in the market. If you have any questions, if you want to know how this data applies to you or your situation, just give me a call. I love talking about this stuff. I'm a total data nerd. And yeah, I hope you had a great Sunday, and take care. Bye-bye.